All right, so we're back with Sandstorm here with Ian Grundy.
Hey, Bern, how are you?
I'm doing just fine. I guess we'll start off with just checking in on, what has been the activity and focus at Sandstorm since last we spoke in June.
So since June, the main focus has just been continuing to move the portfolio forward, and it has done in pretty exciting ways. One of the things we've been saying recently is that the future of Sandstorm is in construction. We have 4 primary assets that are in construction or early works today, being Greenstone, Platreef, Robertson, and Hod Maden. All 4 of those assets continue to progress really, really well. And so we're very excited about them contributing as early as next year and within the next 4 to 5 years, which will lead to significant growth for Sandstorm, and then delevering within the portfolio and harvesting the cash flows to pay down the debt that we took on last year in a pretty active M&A year.
But in terms of capital investment activity in the sector at the moment, what are you seeing with your peers? What's going on? What's the mood out there?
Yeah, I would say a few dynamics. The number of big chunky royalty portfolios that are probably going to transact. We saw quite a few of those over the last couple of years, probably fewer going forward, just given the ones that have actually come to market. And then just financing capacity for various companies and valuations in the industry. I think for juniors, the pullback in all metal prices and equity markets in particular has meant that there's a real gap in funding available for them. I think, we've done quite a bit of marketing recently, and a question that we get commonly from investors is, with that pool of capital so starved for juniors, are you seeing lots of compelling opportunities for new royalties that would be in production within 4 to 5 years? And I would say that landscape, to me, of people that are really seeking out that royalty capital is probably more things where you might have a mine in 8 to 12 years, but it could be longer than that. So it's probably longer dated timelines than most people are thinking about. Some still interesting optionality assets, but that's probably more the landscape. And then just, a broad push to higher for longer interest rates, I think, is pushing up cost of capital for everybody in every sector. And we're seeing that reflected in, both the capital that's available to potential streaming and royalty counterparties, as well as, pricing that you're probably going to see on deals going forward as well.
I get the sense that a bigger portion of the capital stacks will come directly from cash flows from majors. And I assume that they will really want to avoid having permanent encumbrances of the assets.
Yeah, I think when I look at the really big companies in the sector, they are still very well capitalized. Their balance sheets are in really good positions. Growth in some areas is starting to take hold a little bit more, but I would call it, self-funded or more muted growth. We're not seeing very aggressive growth plans across the sector, in part because of the cost of incremental debt that people would have to take on. And so I think you'll see development projects continue to need royalty and stream financing because it's become a core suite of how those projects are capitalized into construction. But in terms of majors pursuing royalties and streams, I think they'll be, sellers of royalties and streams that they've accumulated through M&A over time, rather than, incremental users for the most part.
So on the corp dev side, you're basically, seeing, you're working on the bottom of the pyramid. Is that correct? I mean, you work with the early stage to get what you see as high quality green fields or prospecting projects. That's cheap now, maybe. Is that
Yeah, I mean, the reality is that we're seeing the best return on capital right now just from paying down the debt, and that's a bit of a boring story from the corporate development perspective. But that, we've invested significantly in growth, both near term and the long term sustainability of the production profile in the company, particularly over the last 18 months. And so we're very happy with how those assets are progressing. And so that's going to continue to be the focus. And then if there are opportunities to monetize non-core pieces of the portfolio, we've said to the tune of $40 to $100 million over the next 15 months, that's certainly something we're going to look at closely. And that would be a combination of either, really long dated royalties and streams, or streams that don't fit, our core suite of what our investors are looking for, or from our investment portfolio as well, because we have some non-core elements of that portfolio too.
Would that be, sort of determined by the metals or something like this, or what would you call non-core?
Yeah, I think, things that make it non-core would be the metal mix. Certainly, if it's not precious metals, that moves it down the relative ranking. If the royalty or stream is capped and limits our upside to exploration or throughput success, that makes it less attractive to us and our shareholders. Or if there's a restricted area of interest or coverage, that could be another element that we would consider when evaluating those projects, together with their likelihood of advancement.
Okay, so I mean, this is a bit of a tricky question, I guess, but so say $40 to $100 million you could potentially see in liquidation. How much would that impact your gold equivalent ounce production, you think, approximately? What would the trade-off be if you would just give a ballpark, give everyone a sense?
Yeah, I mean, the target is to sell those from non-core items that sit outside the guidance right now. So, our 90 to 100,000 ounces this year, we wouldn't see any impact at all, and we wouldn't see any material impact to the 125,000 ounces that we're guiding in the medium term, or the 110,000 long term. It would all be what we call optionality, things that sit outside those buckets, or it would be from the investment portfolio, which has no, geo impact to us at all.
If we look at next year, obviously you're going to continue to delever, but what is your view for the market outlook? What is your Sandstorm's feeling about what's going to happen next year in the investment opportunities and stuff like this in the sector?
Yeah, I think that it seems like we're going to stick with a higher for longer rate environment, which to me probably means a continued cautious approach to growth in the sector overall. And so, I wouldn't be surprised if development projects continue to move more slowly than originally expected. But that'll probably be the next leg of growth. And I think that the overall macro backdrop, if it pulls back, is only going to set up for a much more compelling development pipeline longer term, whether that's in base metals, because you have an energy transition that's coming in where none of the supply gap gets funded for several years, and so therefore the gap gets even wider, or whether that's in precious metals, because you see inflation continuing to run higher for longer. In a high rate environment, gold tends to struggle, but if that inflation continues to run, we would expect longer term the setup to be pretty attractive for precious metals projects.
So you think that maybe next year the partnership with Horizon will provide you a significant competitive advantage compared to your royalty peers, precious metals focused?
Yeah, I think that the next, call it 18 to 24 months is really important for Horizon, because they're going to be going through a number of de-risking milestones at their biggest asset, Antamina. It's going through a permitting exercise right now to expand its tailings facility, which will extend the mine life by almost a decade. the reserve life that is. And so, getting that tick box done is, it's much more than just a tick box itself, and will be very important for Antamina and its long-term success. So we're looking forward to them receiving that at the end of this year or early next year, depending on how timing goes. And then Hod Maden is going to transition to financing and ultimately construction, like a full construction decision next year. And so I think people seeing that play out and seeing SSR move that project into construction and Horizon actually build will be very important to seeing the value accrue within that story and then positioning them for future growth. Horizon continues to look at new opportunities for growth, and there's a number of things that they're looking at right now, which would be attractive bolt-on acquisitions and would uniquely position us to partner with them through the acquisition of a gold or silver stream. And that will really, for us, be dependent on, where our balance sheet is, how much we've delevered, and the attractiveness of the opportunity relative to our deleveraging priorities. And so, I'm hopeful that we're going to execute on something interesting, but may not be within the next 12 months, I would say.
So I guess just to address, I'm sure you've gone over this so many times with investors in the last couple of months, but if we just attempt to appease the worrying about the financial position. So if you could kind of give a napkin calculation outline of the, first the debt position, and then maybe give a sense of what the interest burden is per, annually or quarterly, and then maybe give a sense of what the sensitivity of these interest rates payments are to increase in the Fed funds rate by 1% or something like this. And just
Sure. Yeah. So in the middle of August, our debt balance was $457 million. And that's all on a secured revolver with a suite of Canadian banks. It bears interest at a variable rate of SOFR plus, I think it's 1.5% to about 3%. Currently, we're a little bit below the top end of that range. So it ends up being about an 8% cost of capital pre-tax. And so that's about $35 to $40 million a year right now. And so, 1% extra interest isn't a huge deal breaker for us. It would move it up a couple $1 million a year. But, our target now is to have debt down to $300 million by the end of next year. And we think we can comfortably do that from the combination of the non-core asset sales that I talked about together with free cash flow from the portfolio. We've been generating $25 to $30 million of operating cash flow per quarter. So we're comfortable that we can continue to bring the debt down pretty quickly.
So what kind of, obviously the debt, absolute debt is not the thing. What kind of interest rate, absolute interest rate would you kind of aim for until you kind of change priority, so to speak? So let's say you change it to 40 to say 20 million per annum or something like this. Then it's, an eighth or, a tenth of your annual, revenue from royalties, something like this.
Yeah, actually it tiers down faster than you might expect because the margin on the loan is tied to our leverage ratio. So as we get down to close to that $300 million range, we're getting closer to 2 times EBITDA, and it becomes quite a bit less expensive. And so I'm not sure that there's an absolute number that we would look at, but once we're down, and I would say less so on the interest piece, but more so on two components. One, the debt and rate of change of the debt, closer to that level that we're targeting the end of next year. I think that the balance between future growth and paying down the debt will become a harder trade-off to make internally.
Yeah. It's definitely more of a discussion at that point.
Yeah. We have had quite a few conversations with institutional investors over the last couple of weeks, a number of which have said to us that we'd like to see your debt at least $100 million lower before we really step into the stock in a big way. And so, the target is to accelerate that as much as possible. And I think that is driven by two things, both the rate of change on the debt as well as the absolute level is what they're looking for. And so that becomes a pretty easy box to tick to get those investors to buy your stock if that's all that's standing in between them and buying.
And I mean, in terms of approximate timeline, of course, it's dependent on if you're able to shed non-core assets or find a good deal there. But do you think that it's realistic to expect this target to be achieved by Q2, Q3, summer next year? Or what are you kind of thinking on that?
Yeah, I mean, the $300 million number that I mentioned was Q4, end of Q4 2024.
Okay.
So, the exact pace will ultimately be dependent on how quickly we execute on any of those non-core asset sales together with commodity prices. And the other thing I would say is that 2024 is probably going to have more of a back half weighting to it because of the timing of the Greenstone and Platreef ramp ups at those assets. Greenstone will hit commercial production in the middle of 2024. And so we'll really see those cash flows start to materialize in the second half of the year.
Yeah, so when you say 300 million, because it's an EBITDA to debt ratio, right? And your EBITDA will materially increase. But is that on an annualized basis, the ratio, or is it a quarterly basis?
It's done on a trailing 4-quarter basis.
I see.
Yeah.
Right.
Yeah.
So it will be a bit slower for them to meet, I guess.
Yeah.
But, okay. That's
right.
very clear. Okay, so before we jump into looking at your guidance in more detail and also your optionality, let's just clarify if someone is new to the story here, what is the current run rate of gold equivalent ounces production on an annual basis, and what's your approximate cash cost per ounce?
Yeah, so for 2023, we're expecting production of 90 to 100,000 gold equivalent ounces of production. Over the next 4 to 5 years, we're expecting that to grow to 125,000 ounces solely from assets that are either producing today, in construction today, or in early works today. So just from assets that we call high confidence output assets, which is really exciting growth for us. Currently, and over the medium term, we generally have about an 80% EBITDA margin, and that shuffles around a little bit with the specific assets that are producing in the portfolio and whether they're a royalty or whether they're a stream, and depending on what the ongoing payment rate is. But we expect that 80% level to be a pretty good rough estimate both now and going forward.
So if someone were to take your say 100,000 ounces gold equivalent ounces and then multiply that by gold price, then they would multiply that by 0.8. How close would they be to calculating your annual, free operating or free cash flows? I guess free debt payment or something like this.
Yeah. So the portfolio today is going to generate about $150 million after tax from the assets themselves. Then you have to strip out a little bit of G&A, about $8 million a year, and then the $35 to $40 million of interest payments is the most material piece, as well as our $15 million dividend a year, depending on how you look at that, whether you're trying to get to excess free cash flow to equity. But that's probably the best ballpark of free cash flow today. And then, our production is going to grow by 25%, and then the interest piece is going to shrink materially over that timeline. Like by the time that we're hitting that peak production rate, we would expect that our debt balance is at or near zero in the absence of new growth in the meantime.
Of course, as everyone knows at this point, through your acquisitions of BaseCore and Nomad, now you're guiding to reach 125,000 gold equivalent ounces by within the next 5 years, let's say. So before we dig into how this could be exceeded significantly, we'll just take a closer look at the key assets that will get you to guidance. I think we'll start with Greenstone. Of course, this is operated by Equinox Gold, Western Ontario. So could you just give a synopsis of the project?
Yeah, so Greenstone is going to be one of Canada's largest open pit gold mines when it commences operation early next year. Commercial production is scheduled for the middle of 2024. And once fully ramped up, the first 5 years, Greenstone's expected to produce 400,000 ounces of gold a year. And to Sandstorm, very material, because it'll mean in the range of 9 to 10,000 GEOs per year once it's fully ramped up. It's also a very prospective ore body, both the potential to expand the open pit and to chase the underground down plunge extension of the ore body, together with a really large exploration and resource package that's all on the joint venture ground and all covered by our stream. They have nearly 400 square kilometers of concessions that are under the joint venture. And so our expectation is that as Equinox transitions from being laser focused on building this mine on time and on budget, they'll transition to looking at how to deliver upside at the asset. And we see pretty strong potential for the 15-year open pit mine life to get better over time.
Right. So I mean, the mine life can be improved, but ultimately, do you think that within because the mine will be built fairly soon, so do you think within a 5-year time frame an expansion could be something that could take place? Is that a possibility for Greenstone? Is that being at all discussed or buzzed about?
Yeah, so I think that there's a couple things that could materialize for Greenstone within that time frame. The first is Equinox has already flagged that there's 10% excess power capacity at the site, and one of the things that they're looking at is taking throughput to 30,000 tons per day at Greenstone. So that could certainly materialize. I think the first focus is let's get this mine operational into commercial production and hitting the targets that we want to hit, which is obviously the most important part to us, is getting, that long life mine properly into production. But then that kind of throughput expansion could certainly materialize. They're going to be completing an underground desktop study next year. And so, I'm not sure that the underground would come in that 5-year time frame, but certainly some of the specifications around underground and around resource growth could certainly materialize over that 5-year period and become baked into expectations within that time frame.
I guess just clarify what's the terms of the stream and what kind of gold production impact will this have to Sandstorm?
Yeah, so the stream is 2.375% of 100% of Greenstone production. Our stream is actually referenced to the minority joint venture portion, but on 100% basis, it's 2.375%. So that's about 9,000 to 10,000 ounces a year to Sandstorm. And then if you were to toggle throughput up by 10%, it'd be pretty much a linear benefit to Sandstorm stream as well. So another 1,000 ounces a year approximately. And then, depending on how those resource growth pieces played out over time, it could be more or less material, because as the production profile drops down, if that gets backfilled with other ounces from elsewhere, you could stay at that higher 10,000 ounce rate for longer, or potentially more if there's been throughput expansions.
So this is a steady state asset, a big piece on the chessboard for Sandstorm. If we move to Platreef, South Africa, operated by Ivanhoe Mines.
Yeah, so Platreef is going to be one of the largest PGM copper, nickel, gold mines in the world once it's fully built and ramped up. Ivanplats is progressing really, really well. There, they are guiding for first concentrate production in Q3 of next year, which will be the start of what we expect to see as a multi-decade mine life at Platreef. They've designed it as a phased operation. So the first phase right now is phase 1. That will be 700,000 tons per year concentrator throughput. That will then self-fund a much larger expansion to 5 million tons per year. I think what we've seen this year that's very important to us, both on kind of a 5-year outlook as well as a long-term outlook, is de-risking of that expansion potential and that growth potential. So development rates at the mine have proceeded very, very well. They've developed 2 kilometers laterally, and it'll be close to 10 by the end of next year. That's very important to being able to push additional development and additional tons longer term. I think the other thing that's flown under the radar for Ivanhoe this year is just the de-risking of both phase 1 as well as the future expansions through the conversion of the 3rd shaft from a ventilation shaft to a haulage shaft. It doesn't get a huge amount of attention because of the size of Kamoa-Kakula within their portfolio, but that's really important to us because it will allow Ivanhoe to accelerate that first expansion from just under 1 million tons to 5 million tons a year, and that translates to almost 10,000 ounces a year to Sandstorm once it hits that 5 million ton throughput level. And so if you can pull those forward into the 4 or 5 year timeline instead of being I think it was 5 or 6 years out in the feasibility study, that would be further enhance the growth profile that we're guiding to, together with setting the mine up for much longer term success and continued expansion. If we look at what Ivanhoe has done elsewhere, they've been very aggressive at expanding their mines in a sequence basis and on a very rapid timetable. And that's kind of how we're thinking about Platreef as well, and how we expect it to continue to grow going forward.
Right. So I mean, in the guidance, you're guiding with the 1 million ton scenario, right? So in phase 2, it would be 5 million tons. It's a 5x increase in throughput. But I think it would be very good to clarify the terms of the stream for Platreef, obviously, because you have a bit of a unique setup there.
Yeah, so the terms of the Platreef stream, we are syndicated on that stream with Orion. So 100% of the gold is delivered to the streamers. We have just over a third of that gold. So it's just over 35% accrues to Sandstorm on an annual basis. And that proceeds basically for most of the original feasibility study life before it drops down to a lower rate long term.
Right. So so at the 1 million ton, how many gold ounces will you be able to get initially?
Yeah, the initial throughput is going to be in the order of 2,000 ounces per year, and then it steps up to close to 12,000 ounces a year longer term once you hit that 5 million ton per annum expansion longer term. But then there's a third expansion that's potential beyond that would further accelerate cash flows and make Platreef by far the largest producer within the portfolio. And so if I think about what happens at Platreef over the next 5 years, I think what you're going to see is that 5 million ton per annum expansion gets pulled forward. You see that growth sooner. And then you'll see Ivanhoe start to talk about the longer term expansion potential as well. If I look at what they've done elsewhere, that would be pretty consistent with how they approach their long life projects.
Okay, and we'll get back to the long-term part of Platreef again in a little bit. So let's move on to Robertson.
So Robertson is a really important growth asset for us, but it's also a really important growth asset for Nevada Gold Mines. It's part of their Cortez complex. And one of the things that I think is very important about Cortez and was one of the rationales for forming that joint venture in the first place was that district is going through a bit of a transition from high-grade oxide millable ore to more complex metallurgy that needs a roaster and needs to get shipped up to the Carlin complex. And what that means is spare mill capacity at the pipeline mill, together with depleting oxide heap leach production. And that's exactly what Robertson brings to Nevada Gold Mines. So they've now declared a 4 million ounce resource at Robertson. That's double what they had in 2020. And they continue to identify multi-million ounce near mine exploration potential. So we're really excited about the growth that's possible at Robertson, both that sits in our near-term production outlook, as well as I think the more material part that we're going to see over the next 2 years is that resource will continue to grow. Barrick has filed a plan of operations with the state of Nevada that identifies an initial 12-year mine life. And that's primarily heap leach ore from 3 pits. But what they've also started to say is that there's potential to both extend several of those pits outwards, whether that's at the distal target or at Altenberg Hill West, but also to infill the gap between the porphyry pit and the pit to the west, which could potentially bring those two together and add quite a bit of additional ounces. So I wouldn't be surprised to see a much bigger resource from Robertson in the near term, even before it starts contributing material cash flow to Sandstorm.
Yeah, so in terms of, I guess maybe reiterate the timeline that you guys are expecting, and then the terms of the stream and the impact that it will have in terms of gold production for you guys.
Yeah, so Robertson is, we're following Barrick's guided permitting timeline, which is for first production in 2027. And we have a variable rate royalty there. And the royalty goes from 1% to 2.25%. At current gold prices, we would expect about a 1.75% royalty rate. Barrick has said that they see this as a tier 2 asset, so that's 225,000 ounces of reserve production over a minimum 10-year mine life. And so if you just take those numbers alone, that's 4,000 ounces a year to Sandstorm right now. Yeah.
And how does that stream flex? Because between 1% and 2.5%. So higher prices, would that give you?
Yeah, that's right. I don't have the grid in front of me, but it's it's I think it's from $1,200 an ounce up to a maximum of $2,000 an ounce drives the variable royalty rates. And based on where we're sitting right now in the grid, that puts us at about 1.75%.
Okay, I see.
But so higher gold price really torques that royalty in two ways, both in terms of realizing on the higher gold price as well as realizing the higher royalty rate.
Exactly. So that's double leverage.
Yes.
And I guess these streams could actually be structured the opposite way, of course, depending on the strength of the operator. Of course, the big boy, Hod Maden, has been the champion of your portfolio for quite some time.
Yeah. Hod Maden is going through an important study phase right now and de-risking phase, which is very important from executing on the project perspective and less exciting from a news flow timeline perspective. So SSR, I think, as we talked about in June, took over operatorship of the project in May. They're continuing to advance early works and complete their detailed study work at the project. They are updating the 2021 feasibility study. They've said they don't see material changes, but they want to make sure that they're as ready to go as possible when they sanction this project sometime early to the middle of next year. So that they can execute as well as possible. And that's exactly what they did at Çöpler in Turkey, and it's exactly what we expect them to do at Hod Maden. And so, we're very excited about the new study that's going to come out that'll update capital operating costs and production ramp up outlook, all of those typical things, but we're not expecting anything substantially different versus the original study. And so we're very excited about starting to see that asset move into construction. I mentioned that it's in early works now. Horizon started to make its first cash calls to the project in a more material way, which is very exciting for us to see, things actually move along at the project and for the mine to become more real, which I think is only going to accelerate over the next 24 months.
And again, let's look at the impact that goes to Sandstorm, partially through Horizon as well, but what will it be in gold equivalent ounces?
Yeah, so we have a 20% gold stream reference to Horizon's output at the project. The 20% is on the whole project. And so what that means is when the mine enters production, it's somewhere in the range of 35 to 40,000 ounces a year to Sandstorm. So of that growth that we're looking at over the next 4 to 5 years, that is the single biggest component of it. And so we're very excited about that because Hod Maden is one of the highest grade, highest margin gold projects out there. And so we're excited for that project to ramp up and deliver material to cash flow to Sandstorm after what's been a long period of seeing that asset through development.
Yeah, and obviously these 4 assets are the core, right, of the guidance, and they are all operated by very strong mining companies, very experienced, large. They're able to execute projects, we know that. But then you have a kind of a fifth piece here, Blyvoor, operated by Blyvoor Gold. And this is a company that's private and people are maybe not that familiar. So it would be very interesting to get some more color on that and understand what kind of growth will come out of this stream too.
Yeah, so Blyvoor is still an important asset for us. Very happy with it. It continues to plug along and grow incrementally from month to month. We've guided long-term for production to be from 60 to 80,000 ounces at Blyvoor using conventional mining methods. And we continue to see that taking place over the next, probably 18 to 36 months, depending on exactly how the ramp up goes. I think, just giving your comment on major mining companies, one thing that is important about Blyvoor is that, yes, it's private and it's not as well known, but the main operators behind it actually has spent multiple decades in that part of South Africa working for mining majors, Anglo and others in the district. And so while the company itself is not a major, the company has expertise that's been harnessed in one of those environments. And so that's one of the things that really gave us confidence of making the investment and doing the Nomad deal in the first place, was really liking the operating team that they have in place. And so they continue to move that asset forward. And it's really just a question of getting the right development in place and continuing to advance additional phases to grow throughput and put additional tons through the mill.
Yeah, and of course, expertise is essential, but one of the other benefits with being a large company is, of course, you're capitalized. So if something goes wrong, you can take care of it. And I assume so maybe it would be good for us to understand you're not too worried about that in Blyvoor's case.
No, we're not too worried about that. In Blyvoor's case, they've done an excellent job of executing and advancing the project within the private company that it is, and you know it it's able to produce pretty profitably even at lower gold prices, and so that gives them some buffer to advance development, and that will ultimately drive some of the pace of the ramp up, which is why I use a pretty large range, because if gold prices go higher, then they'll reinvest additional cash flow in growing more working faces, and so that'll be a big part of the Blyvoor story.
So what's the throughput sitting at now? What are they ramping up to? What's the gold production now? And you said they will reach 60 to 80,000 ounces somewhere around there. But what could you clarify the exact figures here?
Yeah, it jumps around a little bit from month to month, but they're somewhere in the order, like especially you can see the attributable deliveries that we're getting in our statements right now, and it's I would say half to 2/3 of the ultimate throughput rate, which is up substantially from when we bought the asset, and so we continue to expect kind of measured growth month over month as they open up additional phases.
Let's say it's currently X. What you're saying is that it can become is what you're saying is it can become 2x or potentially 1.5x. Is that the increase in gold ounces?
Yeah, I think that's a good way to think about it on a medium term basis. And then I think Blyvoor itself has ultimately much higher targets for the mine, and we'd like to see it continue its ramp up before we start including those higher rates in our guidance.
Okay, so in absolute terms, what are you guys receiving now on an annual basis, and then we can obviously do the calculations ourselves.
Yeah, like right now we would be receiving something in the order of 30 to 40,000 ounces, 100% production on an annual basis, and then our stream is 10% of that.
Right. Okay. So that's good. 3,000 ounces you can see from there, or something like this. 2 to 4. That's good to know. And I think I might as well ask about Blyvoor. So what is are they expanding the capacity itself? Is it a capital investment exercise now? Is the build, or is it just a ramp up? Is that done? Where are they currently in the process?
It's just a question of opening more working faces within the mine. And so, that's, I guess, twofold. Is one, investing the dollars to get those new faces up and running, and then technically having them open. Have you done the right underground development, and are you able to access all those faces at once to increase throughput to the mill? That's the main focus right now, is increasing the number of working faces available to the team so they can get more tons up and through the mill.
At that point, let's say when you're at that peak, when Hod Maden has kicked in and Robertson has kicked in, that local peak, of course, what would and this is difficult to say, but just you're familiar with all of the assets, you could give a ballpark. What do you think that the cash cost per ounce would be on average at that point? Last year it was $284 per ounce, 2022.
I think that 80% EBITDA margin that I talked about before is probably still representative, when that ramps up, because we have some more material royalties at that point, or some high margin streams, and then Hod Maden will pay 50% of the spot price for every ounce delivered to us from Horizon, and so that's a bit of a push and a pull on the margin aspect of things. But I think if you take the gold price times our ounces, 80%, that's probably a pretty good representation of where we can get on an EBITDA basis.
Well, the thing is, that's assuming a static gold price, right?
Yeah, that's right. Yeah.
So if you were to translate that to cash costs on a per ounce basis, I know it's not an easy thing to do, but if you could give a sense, so people can get a sense of the potential leverage.
Yeah, something like $350 per ounce is probably a good ballpark, depending on the gold price.
Yep. Okay. Yeah. So it's of course, and you have streams that are affected by the gold price. So it's a difficult thing to calculate, but that's good for people to know.
Yeah, I think our most material assets primarily participate with the relative commodity price. And so, if you think that the average cost of our ounce received is 20% or something like that, you're going to be in a pretty good ballpark.
So, I mean, you're guiding for approximately 70K of new ounces coming in within this time frame, but you're also guiding for depletion of 38K or something like this, just below 40K.
Yeah.
So let's talk a bit about the main culprits of the depletion to give everyone a sense how this has been calculated and your thinking on it.
Yeah, so I think one, if you just look on a year-over-year basis, if I start looking to next year, one that stands out is going to be Mount Hamilton. We received a $10 million one-time payment on that royalty this year, and that was about 5,000 ounces sitting in GEOs, so you can take that out right there. The Diavik diamond mine has been a good cash flower to us since we acquired it in 2015, but it's entering the last 2 to 3 years of its mine life right now, according to Rio, and so we expect that royalty to roll off over the next couple of years. The other piece of the puzzle would be at Cerro Moro. Cerro Moro was an investment we made in 2015 and really jumped up in terms of production to us in 2019. But there's two things happening at that asset. One is a shift to slightly lower silver grades together with a step in our royalty. We transitioned from a 20% delivery rate on that asset to a 9% delivery rate over the next 2 to 3 years. It depends a little bit on the output that Pan American has at the asset, but that will take our attributable deliveries at Cerro Moro down from what's historically been our largest asset over the last couple of years, or about 15,000 ounces, down to half of that.
Okay, so Diavik, I mean, there is no, for example, if you look at that first, there's no way that will be arrested or anything. It's going to run out of reserve. There's going to be no change in operatorship, someone that's willing to step in and invest. And
I don't know, the diamond market is tricky. There's not that many participants. So my base case is that mine just enters closure and we move on from it. If somebody else takes it over and decides to chase some additional ore at the mine, that's possible. Kimberlite pipes tend to be a bit better defined than some other types of ore bodies. So we'll see, but I think the best days of our Diavik royalty are behind us.
I see, and Cerro Moro, you're seeing a downtrend there. Do you see anything from Pan American? Are they communicating to try to arrest this, or?
Well, I would say Cerro Moro is a very different story in that sense. A lot of the depletion that we're guiding for over that period is driven by a step down in the stream terms, which has been known about since the day we agreed that contract. And so, we fully expect that to happen, and that's going to be a positive thing because it's going to unlock marginal ounces elsewhere at the mine. That ground is really, really prospective. Yamana identified a number of resource extensions, an entire new zone at Natty, which sits within the royalty area of interest. And we continue to see lots of resource upside there. I think my impression from Pan American has been that they've just gone through a major M&A event. Certain items within the portfolio that they acquired or within their existing portfolio were clearly non-core. And so we saw them move to monetize those items first, like Mara, for example. They just weren't going to build a mega copper project in Argentina. That's not their MO. I think with assets like Cerro Moro, it'll be a little bit more wait and see. The company has a strong geology and exploration background. And so I think they're going to go through a period of let's digest the assets. Let's figure out exactly what we have and where we see upside before we make any decisions about what assets are core or non-core and how we want to reallocate our capital allocation dollars. So I think that's the phase that we're going through at Cerro Moro now.
So these projects that you mentioned, 4 or 5 of them, how much of the 38K would you say that they are responsible for?
Between Cerro Moro, Diavik, and Mount Hamilton, those would be the vast majority of that 38K.
Right. So kind of to surmise everything, you'll see some significant growth, H2 next year through Greenstone. Platreef will be a bit approximately the same time, and then you will see a real big shift at 2027. When Robertson and Hod Maden is kicked in.
Yeah, the 25 to 30,000 ounce growth profile that we talk about over the next couple of years is really weighted to the back half of that because of the materiality of Hod Maden. For 2024, we'll give guidance in early next year, probably February when we report our Q4 results. And, we've had quite a bit of feedback on, can you give interim guidance? So that's certainly something that we're evaluating. And I think if it were to come out, would be on that same timeline.
In your core presentation, you kind of list 35,000 ounces potential in optionality items. And so let's just go through it, all of the streams that you refer to. So we'll start and spend a bit more time on the key ones. Let's start with the big one, Mara, of course.
We do have an option agreement to pay $225 million over the build period of Mara to receive a pretty substantial 20% gold stream. That gold stream would equate to 20 to 30,000 ounces a year to Sandstorm, or about 20 to 25 million operating cash flow at current prices to us. And we see it as materially in the money, given that it was agreed at $1,100 gold. And the payment it is capped at that $225 million number. So when we talk about that optionality upside to 160,000 ounces a year, that includes electing on the Mara gold stream and realizing the more material gold deliveries relative to the NSR. But if we, it's going to be a large copper project. It's something in the order of 40 million tons per annum throughput. So the NSR would be pretty substantial cash flows as well to us, should we decide to go that way. But if I were to guess, I think we would lean towards exercising that stream today.
Okay, so and that would cost Sandstorm $225 million, right?
Yeah, that's right. So the way the stream works is that when Glencore is ready to make a production decision, they come to Sandstorm and say, we've decided to sanction this project for development. Would you like to elect your option? And we say yes or no. If we say yes, we then pay that $225 million pro rata with them over the construction period of the project, which is, probably 2.5, 3 years. So something in the order of $80 million a year to us.
Right. And obviously we've seen Glencore take full ownership of this project now. They seem very, very positive, and they have experience in the region, of course. So what would be your expectation in terms of timeline here? What were you guys thinking?
Yeah, so I think Glencore is very bullish on copper and very bullish on the asset itself. They see this as a brownfield project entirely, not as a mega project. They have a mill that's already available that they know well. They also have quite a bit of staff on site. They've got between 200 and 300 people at Alhambra right now. And so I think what happens from here is that they're digesting 100% ownership. They're now going to work through exactly what the permitting plan at site looks like, and exactly what they want the layout at Agua Rica to be. I think that may not be exactly the same as what Yamana was looking at, mostly in relation to where they put some of the infrastructure, like waste dumps and that sort of thing. And so I think they're going to sort that part out, go through permitting, which will take a couple of years. And then sometime, probably mid this decade, I could see them being ready to press go on the project. And so late this decade, if they go as quickly as possible, you could see first production from that asset.
Okay, and to clarify, because the gold production attributable numbers that you mentioned, 25, 30K or something like this, would you expect that to be the same, since they're probably going to process all of it at Agua Rica? It's still able to, it's going to be consistent with what Yamana had painted up in their development scenarios.
Yeah, I think so. I don't see them changing the throughput plans at site materially, and then it's the same ore body that they would be mining. And so, based on our discussions with them, we're not expecting a materially different project than what Yamana had been thinking about, aside from what I mentioned in terms of where some of the site infrastructure is laid out at the pit. And so I would consider those more minor but important tweaks, because they impact how you progress the project through permitting.
And in terms of investment timing for Sandstorm, this would have to be before, I assume, a construction decision or a financing, or what? Isn't any time you can convert it?
No. So the nice part from our perspective is that Glencore has to have made a board sanctioned, fully financed decision to build the project. And it's at that moment in time that they come to us and say, would you like to elect. So we won't be making our investment decision on a pre-feasibility study or even a feasibility study that's not their ultimate building plan. It'll be on the mine plan that they're using to sanction the project and put several $billion into building that project. And then every quarter, as they spend money at the project, they'll deliver to us a drawdown notice, and we fund our share pro rata with all the other capital that's being spent at the mine.
Yeah. So it's basically, once Hod Maden is online, this will be the new Hod Maden in the narrative, more or less, in terms of size.
Yeah, but a really big, long life copper project, right? Like this mine is going to have a reserve life itself of, what is this? It's almost 20 years just on that reserve pit itself. So, it's going to be almost 25 years. A really substantial asset for a long time.
Yeah. And then let's get back to Platreef. Obviously, you had mentioned that it will be, phase 1 million tons. That's 2,000 ounces to Sandstorm. Then now you're expecting that they're going to pull into phase 2. And phase 2 is not within your guidance. And that will bring it up to 5x to 10,000 ounces. So first, can you kind of get back to the phase 2, give some color on that, and then outline what phase 3 would mean for Sandstorm and the timeline with that?
Yeah, and maybe it's important if I clarify one thing. The feasibility study that Ivanhoe released was a phased expansion to the 5 million tons. So sitting within that 5-year time frame, it doesn't make it in there. And we talked about the potential to pull that forward. But in that 110,000 ounce number, it does include some assumption that they finish that expansion. But then the more material piece is the potential phased expansion to 12 million tons per annum. And so, we talked about 12,000 ounces or 10 or 12,000 ounces at 5 million tons per year. I think you can, pretty much just linearly expand that up. If you go to 12, you're going to double or more that again. And so all of a sudden, Platreef would be by far our biggest asset within the portfolio at that point in time.
Yeah. So I guess so 1 million ton, that's going to be quite soon. 5 million, that would be expected by 27.
I think if you plug the feasibility study in now, it's like 29 or 2030 that 5 million ton scenario starts to come online. But then obviously what they've been talking about now is pulling that forward. So we'll see as those studies get more refined what that means. But we're excited about the potential for that 5 to become more of like a 27, 28 type event.
Yes. And that's significant. And then to go up to 12, that's obviously probably something that will happen by the turn of the decade or something like this, if they pull it forward, or realistically, or 29, 28. I mean, it's a huge spike up in gold equivalent ounces for you, but it's also one of those things that will be part of the narrative once, say, Hod Maden and Robertson is online. That these will be the next big things within the portfolios. You already have these big narratives that's going to replace the existing ones.
Yeah, I think that, one of the things that I think about when thinking about Sandstorm is that 2 to 3 years from now, when someone has this discussion with me of where is Sandstorm, where going, it's going to look like a very different company in that time frame than now, because we both know the market's forward looking. It's going to be looking at, what's the growth in 28 to 30 when we're in 25. And yes. So by that time, we'll have Greenstone in production, hopefully fully ramped up. Platreef will be making progress. We'll have better visibility on expansions. First material cash flows will be on the horizon from Tolgoi, from the Hugo North extension. We'll be seeing Hod Maden cash flows coming online very soon, together with a more developed view of the asset from SSR. And so if you look at the nature of the assets in the portfolio and the relative maturity of the portfolio, it's going to transition quite substantially over the next 24 to 36 months. And you'll be looking at a company that's got continued growth from really high quality assets with really strong partners that look quite a bit different than Sandstorm does today, or that it did, 4 or 5 years ago.
All right, then. So, of course, let's look at the golden child in the sector. Fruta del Norte has just continued to exceed expectations, and they're doing a fantastic job. I can safely say that. So, what's your outlook here? They haven't officially communicated everything, to my understanding, yet. Maybe I'm mistaken, but what do you expect to see from that asset within the next 5 years? And clarify where you're at currently. How much do you get out of Fruta del Norte right now? And what's the future?
So we have a 0.9% royalty at Fruta del Norte, which, based on current production rates of close to 400,000 ounces a year, is about 3,500 ounces or so to Sandstorm. To be honest, that asset has completely exceeded our expectations. We thought it was going to be a fantastic asset when we purchased the royalty in 2019, and it's gone as well or better than we imagined, both in terms of the pace which they've been able to expand throughput at the mine, their ability to deliver through the mill and hit their recovery targets, but probably more importantly is their brownfield exploration success. When we first looked at that project, the South Zone looked like quite lower grade and much closer to cutoff, and we were a bit more conservative on what we thought might get converted into the mine in terms of actual production. And they're doing 30 kilometers of near mine drilling in that area this year. The grades that they've been infill drilling have been much better than we expected. And it looks like the resource there, and then ultimately the reserve, is going to be much bigger and much more substantial in that zone than we ever expected, and going to drive a higher for longer mine life at that asset. But that's only kind of the tip of the iceberg to us at Fruta del Norte. Our royalty covers, I think it's something in the order of 600 square kilometers of prospective land, including the entirety of the north-south Suarez pull-apart basin. Lundin is doing another 20 kilometers of drilling this year on other aspects of that basin. And so, we continue to be very, very excited about the regional exploration upside at that asset as well.
Do you think, brownfields too for the Norte itself right now, do you think that will convert within the next 5 years into, actual material throughput expansion? You will see, breach that 500,000 ounce per year, or get up to something.
Our guidance is based on Lundin's latest tech report. So that includes, one expansion post the original feasibility study, but it does assume that the grades drop off and production pulls back. And so I think what you've seen is an incredible ability by that team to deliver and to deliver incremental improvements. And so to the extent that some of that brownfield capacity is able to deliver either higher grade ore for longer, or that they supplement mill capacity to maintain a 400,000 ounce a year production profile, if that continues, that's going to be upside to us. And, each 100,000 ounces of production is close to another 1,000 ounces to Sandstorm.
Yeah, and to clarify, within your guidance currently, you have not revised it now because now they have exceeded your expectations. So within your guidance, what production are you expecting in the next, average?
Yeah, within our guidance, we're following Lundin's public guidance for the next 2 or 3 years, which is all that they've provided. And then beyond that, we just follow the tech report that they put out. I think it's now 18 months ago or so. And so to the extent that this exploration success can augment that and improve that production profile, it'll be upside to that guidance.
So if you have the guidance from Lundin Gold now is obviously very clear. People can go look that up, and that's within your guidance. But I assume there is a drop down from the 18 months. Once you get into that 4th year, I assume that data probably is unrealistic. It's going to be better than that.
Sure. Yeah. I mean, that would be fantastic. And the asset continues to exceed our expectations. And so my recollection off the top of my head is that that's closer to 300,000 ounce a year production. Maybe even a bit below that longer term was what the original mine plan was. And so, if they're 400,000 ounces instead of 250 or 300, there's another 1 to 1,500 ounces to Sandstorm.
And then Chapada, of course, also within the group. You guys have been doing a good job picking out strong teams here, obviously. So Chapada, you have found some new material to the north there as well.
Yeah, so Salva is the new deposit to the north that sits within the stream area of interest, continues to grow. They declared a maiden resource there in February. I think they drilled 13 kilometers in Q2 alone, primarily at that target. And so we continue to see lots of exploration upside at Chapada. And then the other piece that Lundin is still studying is expansion potential at the asset. But I think they need to understand the greater regional prospectivity before they make any decisions there. And so from our perspective, it's just continue to sit back and let them do what they do best, which is put a lot of drill holes in the ground, grow the resource materially, and then evaluate what that means for the long-term production outlook at Chapada.
Yeah, and then again, to clarify everyone, what's the current gold equivalent production that you guys get, and what's the throughput at, and what could potentially be envisioned as a throughput expansion and approximate timeline?
Yeah, so Chapada right now we have a 4.2% copper stream that is capped at 3.9 million pounds a year, and typically they hit that annual cap. Over the next 2 or 3 years, we're going to step down to a 3% stream rate, kind of on a similar timeline as Cerro Moro, maybe a little bit later than Cerro Moro. So you're going to see that stream go from being, it's been, call it 8,000 to 9,000 GEOs a year to us, to ticking down a little bit, maybe 6 to 7. But offsetting that would be the potential for expansion. So I think Lundin's still trying to go through exactly what they think the right throughput should be. The mine right now is doing about 24 million tons per annum of throughput. And there's been talk about, should that go to 30? Should it go to a number beyond that? And so, 30 million tons would be, what is that? That's 25% uptick. And so that would more than offset the depletion that will come from our step down. And so, I wouldn't be shocked. Like the Chapada stream had 2 step downs, one from 4.2% to 3, and then down to 1.5% long term. And I wouldn't be surprised to see that asset continue to get better over time, so that it just becomes kind of a flat production profile with Sandstorm long term.
Yeah, and obviously, if I recall correctly, the northern part does seem to have higher average grade than the current operation. So that's further offset. It's not just a throughput; it's actually improvement in grade too, probably.
Yeah, and I think in all likelihood, like only the first phase of our stream had that cap. The 3% is uncapped, and so to the extent that higher grades come in, it's probably once we've transitioned to that new uncapped rate. And so we would benefit entirely from the higher grades.
Okay. And then we have Lobo Marte, obviously in Chile, operated by Kinross.
Yeah, so Lobo Marte is, meaningful development project to Kinross in Chile. I think the last that they talked about sequencing at that asset was that it was going to be kind of late this decade in terms of timeline. Great Bear will probably impact that a little bit. And because of that uncertainty, it sits entirely outside our guidance. We have a royalty that's just over 1% there. It is capped at $40 million to us. And so, if they enter production by the end of this decade, you're looking at kind of, and it's, close to current prices, you're looking at $5 to $6 million a year in cash flow, or 3,000 GEOs a year to Sandstorm over, close to, call it an 8 to 10 year mine life, depending on what metal prices are and how quickly they get to that $40 million cap.
There's more optionality, but we'll do a bit more rapid fire. So we'll go through all of them. You'll just give a quick overview of the project, outline the impact, so approximate impact, and the likelihood that the project is built within the next 5 years, 1 to 10 or something like this. You can just rate it 1 to 10 in terms of likelihood of coming online, clarify the impact, and give a quick explanation of the project. So we'll start with Woodlawn.
Yeah, I would say Woodlawn, 8 or 9 out of 10 that it enters production in the next 5 years. It looks like develops highly advanced that restart of the mine in Australia. It's a VMS zinc copper polymetallic project. We have a silver stream that we acquired from Nomad there, so would not be surprised to see that enter production in 2025, maybe 2026 if things go more slowly, but they're advancing quite well.
And the impact of that stream to gold equivalent ounces production?
Yeah, gold equivalent ounces I think would be about 3,000 to 4,000 GEOs a year. For I think it's about 3 to 4 years. There was a cap introduced on that one when Nomad restructured that asset and stepped in. So I think high likelihood that the asset enters production and you relies on those cash flows for a few years.
Okay, and you say 8 or 9, so the operator, you're confident they're going to be able to execute. And
yeah. I think you look at who's behind that team. and their ability to raise money so far, I think that they're going to have a number of options available to them.
Okay. Horne 5, Horne 5.
Yeah, Horne 5, I would say, in its current form, 2 to 3 over the next 5 years. It's advanced in terms of feasibility study, but they need to sort out some indemnities with Glencore over the land that sits near the Horne smelter. And in Falco's current form, I think that probably is a project that needs to sit in bigger hands before I'd be confident saying that that's definitely going to be in production in the next 5 years.
Yeah, so that's more of an incubation thing. It's going to have to switch hand probably if we're harsh about it.
Yeah, I think so. What's attractive about Horne to us is that it's a large ore body that's extends to depth and could grow over time, and then a massive land package. I forget exactly how many hectares it is, but it's many thousand. Like the royalty itself covers a huge area in a prospective part of Quebec. So it's both about the deposit itself as well as the broader land package for the royalty.
Perfect. So Troilus.
Yeah, Troilus is a harder one to handicap in terms of an absolute number. The team's been pretty good about moving the project along, but it's going to be a very, very big, expensive project to build. So it's hard to give that one more than a 5 out of 10 in the next 5 years until you see the market for development projects and for development juniors improve a little bit, just because they'll have to bring a lot of capital to the table to build that project. But they're working on a feasibility study right now that'll be out at the beginning of next year, and I wouldn't be surprised to see material resource growth. They've had some success drilling off the end of that the 2 main deposits and extending some higher grades there. So, we'll be watching closely what they do over the next couple months and what that means for whether they are able to advance it to a financing position, within the next 24 months, which would meet that 5-year timeline.
But that's a solid project. It's quite advanced. The company is doing okay. They have financing. I looked at their balance sheet, at least it looks okay. They can advance the project. With Troilus, so what would the impact approximately of this project? Once it would be implemented? It's a big project, but your stream is what?
Troilus is a big one, and it would be pretty material to us. We have that 1% NSR, and at current gold prices, that would translate to about 45,000 ounces life of mine over the feasibility stuff, or over the PEA that came in a couple of years ago, or about 2,000 to 3,000 ounces per year based on that design. I think the project might get bigger in terms of its design, so we'll see. Let's
move to Gualcamayo Deep. The Carbonates Project. That's a producing asset currently, but they have an expansion, it seems. What's the takeaways from that?
So if you had asked me this question 3 weeks ago, I would have said 2 out of 10 for Gualcamayo, and now I think I have to go with a number that's well over 5. It's just traded hands from Mineros to a private group. That private group is very keen to reinvest in Argentina. They have substantial operations in country already, both mining, but also like a number of other industries. And they're very, very keen on the Deep Carbonates project. That's why they bought Gualcamayo in the first place. And so we're working through that process with them right now to understand their outlook for the asset, but it looks like their plan is to move forward with it in the near term. And if we get, more clarity on that from them, or more definitive timeline, then, obviously we'll be updating people on that, because we have a 2.5% combined NSR on Gualcamayo between the Deep Carbonates project together with our existing royalty that was acquired from Premier Gold Royalties in 2013, together with a $30 million construction payment on DCP. And that all sits entirely outside of our guidance. And so to the extent that project's actually moving forward here over the next 36 months, that'll be very material to us, and make sure everybody understands that.
So this might be difficult to say, but ballpark again, what kind of gold equivalent ounce increase could you see once that is implemented, approximately?
Yeah, so, I think that we'd have to chat with them a little bit more on how they're thinking about production profile at DCP, but, 2,500 ounces to Sandstorm for every 100,000 ounces of production is probably the easiest way to think about it. So if you think it's going to be a 100,000 ounce producer, then you have your answer. But if it's a 200 or 250, all of a sudden you're into like a 5,000 or 6,000 ounce a year producer to Sandstorm. So that's one of the processes that we need to go through with that with the new owner to understand what the outlook is for DCP and exactly how they'll build it.
And who is the operator?
It's a
company.
It's a private group called Aris LLC, and they're owned by a European private conglomerate that has operations across a number of different industries, including mining, infrastructure, together with operations in the wine industry as well in a number of countries.
And Montagne D'or.
Yeah, I would say that one's got to sort out its path to actually getting into construction first and foremost. So I put it at a 2 or 3. Right now, they have to sort out getting the asset into the hands of Aurizona, which has proved to be a very complicated exercise because of the Russian sanctions that are in place, together with getting through their social license at the project. And so those are the most important 2 steps to them before they then go build what we think, on its own is a compelling project. And so, that's the main thing for that asset over the next little while.
So where's that asset at? Who's the you mentioned the operator, but you just give some more color on the asset.
Yeah, so the asset is located in French Guiana. It is currently operated by Nordgold, but the asset is in the process of changing hands from Nordgold to another company called Aurizona. It's Aurizon's main asset. We have a 1% NSR there, and the project has been designed as a 200,000 ounce a year producer once built. And so that would translate to, call it $4 to $5 million a year in revenue, or about 2,000 gold equivalent ounces.
Then we have the Suruca deposit.
Yeah, Suruca, I think timing for that is always a bit of a challenge because where exactly does it sit in Lundin's priorities at Chapada? I think given everything that's going on over the next couple of years at Chapada, my guess would be that other aspects of Chapada get better before Suruca is implemented into production. Like I wouldn't expect Suruca in the next 5 years unless you see the gold price really, really shoot up and make it compelling to go and mine that area first. But I think particularly as a copper company, Lundin's focus is going to be, let's define the salvo target. Let's outline all the mineralization that we can find at site and proceed with an expansion. And that's probably where you see incremental benefit to Sandstorm over the Suruca deposit. But before that mine is shut down, do we realize on that royalty? Yeah, I think so. Because I think, as mines age, people chase the economic core over time.
So the Suruca deposit, do you have, because you have a copper stream on Chapada, and it's a gold central part of the...
so Suruca is a gold deposit, and the Suruca royalty is a gold-only royalty. And so when I say, I think we're more likely to realize on the benefits of the copper stream in the near term than we are on the Suruca gold royalty.
And then finally, Mount Hamilton.
Yeah, Mount Hamilton, we went through... at least in the near term, the most important piece with that asset this year, which was getting the $10 million payment. It's permitted. The mine is, the project is advanced, but while it sits within Waterton, building a project like that isn't within their MO. And so I think what you'll need to see is an environment for them to feel compelled to transact, probably with another junior or equivalent. And when that fully plays out, we'll see the asset advance further. Whether that would happen in a 5-year timeline or not, harder to say.
That would wrap up the optionality kind of discussion that I wanted to have. But I also want to speak on some of your large assets that are not necessarily within the guidance, but can still outperform just based on, excellence in operatorship and so on. So if we just start with Antamina, obviously a big important asset. What are you guys' view on the development there? If you give a view on the next 5 years, what's probably going to happen?
Yeah, I think Antamina, from a production perspective, you'll continue to see relatively steady state over the next several years. But the mine is going through a very important phase right now where it de-risks its long-term production potential, particularly by increasing its tailings capacity. So they've been going through a permitting process in Peru to increase the tailings height, which would extend the mine life to 2035 initially. But they've also studied a number of different tailings reinvestment options that will expand capacity materially and allow this to be a multi-decade mine. And so over the next 5 years, I think you're going to see increased clarity on that. One, over the next 12 months, you're going to see that process permitted to extend the mine life to 2035 or 2036. And then over the next couple of years, you'll see additional clarity on how they make this a mine that can continue to operate in 2040 or 2050. What that means to us is that in the near term, depending on copper prices, we expect the royalty to continue to be a robust cash flow. As they reinvest in some of that tailings capacity, it'll probably lower the royalty payments or introduce additional volatility, depending on how quickly they spend that money, because it is captured as a deduction within the NPI. But that'll set up, higher cash flows for a much longer period to come.
And then very interesting as Caserones obviously switched hands to Lundin Mining now, a company that you partner with on multiple projects. What's your view on Caserones?
Yeah, Caserones, we're very excited for it to be sitting in public hands and to get a higher profile. The other thing that I think is really important at Caserones is looking at the blueprint of what Lundin has done at Candelaria and at Chapada. And in both of those instances, they acquired an asset, people looked at it and said, okay, this is an interesting asset. And then they went out and drilled the deposits like crazy to materially extend the mine life and make the production profile better. And I have every expectation that that's, their blueprint for success at Caserones as well. They've identified, I think it's something like 7 exploration targets. Almost all of them sit within the royalty grounds. And so there's a much broader play of how does Caserones fit into the Vicuña district and feed, multiple large ore sources. But I think in the near term, the easiest thing and the best way for Lundin to deliver value for its shareholders is to identify either brownfield satellite pits at Caserones or extend the ore body at depth, or there's a neighboring potential deposit. I think it's just to the northeast of Caserones right now. And so I think it's going to be about proving out those items first, because you don't have to do additional permitting. You don't have to build major infrastructure to transport ore. And it's very easy to enhance the value of your asset just by drilling out those areas. And so that's what we're most excited about at Caserones.
How's the royalty structured? Is the net smelter return?
Yeah, it's a net smelter return royalty. We have a 0.6% royalty, and it technically is a variable royalty depending on copper price, but you hit the highest tier, I think, at $1 a pound copper, because this royalty was structured so long ago. So we expect that royalty to be 0.6% into perpetuity.
So is it structured on the basis of the ore that goes through the mill, or is it based on where it's mined? Because some people are whispering about ore being potentially sourced from other deposits nearby to this mill that might be within the Lundin mining sphere in the future. Would that be up for grabs for Sandstorm?
Yeah, so as is typical for our royalty, it covers mineralization within an area of interest. The Caserones area of interest is pretty substantial. It wouldn't include something like Los Salados or Jose Maria or any of like those other major Lundin companies. And so, those wouldn't be attributable to our royalty, but I also don't see those displacing our royalty anytime soon. And I think that should you prove that those are economic, I think more likely, given the operating nature of Caserones, you'd probably start to think about expansions rather than,
of course,
rather than just displacing our ore, given the cost to set up infrastructure, develop those deposits, and then move that rock over to the Caserones mill.
Yeah, and I guess the very positive development is that this is sort of a key to the district, and it's quite clear what Lundin has as this is the biggest Lundin Group company. This is the flagship company in the group, so they're gonna put a lot of effort into this vehicle.
Yeah.
So with Caserones, if you just could give the impact in gold equivalent ounces currently, and then we don't need to get into what it could be because it's a bit too early for that, but just what it is currently.
Yeah. So Caserones is producing on the order of 130,000 tons of copper a year. That's like just shy of 2 million pounds to us, which at current prices would be, something like 3,000 to 4,000 GEOs a year.
Yeah, and this asset, one could imagine this being improved by 50% within the next 5 years easily.
Yeah, I mean,
I would say.
We'll see. Yeah.
And then Aurizona, obviously, this is a stream you had for a long time, and it's paid and done some for Sandstorm. What's the outlook?
Yeah, Aurizona, it's continues to produce very well for us. We're just in the open pit operations right now, but Equinox has been able to manage the rainy season better this year than in prior years, and therefore, we're seeing more of a steady royalty rate on that one. But what we're really excited about is the prospectivity of the various satellite deposits together with the underground. Equinox is studying the potential to go underground concurrent with the open pit mine life right now. And I think over the course of next year, we're going to get a much better sense of what their plans are there. And I could easily see that sort of upside start to play itself out over the next 5 years.
Right. And the impact, again, for Aurizona, what would that translate into?
Yeah, so we have a 4% royalty at Aurizona right now. The mine is generating gold equivalent ounces to us that are, I think it's about 5,000 or 6,000 ounces a year right now. Bear with me while I just confirm that. Oh, that's too high. No, sorry, 5,000 ounces a year right now, pretty close. And so, if they're able to augment the production profile with another 50,000 ounces or so, that would be 2,000 ounces to Sandstorm.
And then Oyu Tolgoi, finally.
Yeah, Oyu Tolgoi. So we have streams on Entree Gold's, Entree Resources' Hugo North extension portion of the deposits. It does end up being really meaningful to Sandstorm, but I think the thing that's most interesting about Hugo North is the fact that Rio is now into their first drawbells at Hugo North. And so just given the amount of infrastructure that you need to put in place to build those block caves, we're through the biggest, hurdles to actually getting into production on the Entree ground. And so it's really just a matter of time. It's probably not going to be until late this decade that you start to see material deliveries to Sandstorm, just based on sequencing and when cash will be available to Entree. But by the time, 2028, 2029 comes around, I expect to see Sandstorm start to generate meaningful, $3-5 million a year in revenue to us, and have that continue for multiple decades.
Perfect. Well, I think that should give everyone a pretty good view on your portfolio and the built-in growth.
Yeah, I think, as I said before, the portfolio is going through a really important maturity phase right now. Over the next 24 months, we're going to see 2 very long-term assets come into first production, and then we're going to repeat that exercise again in the next 3 or 4 years. And so when I look at where this company is now versus where it's going to be in 3 to 4 years, it's going to have much more of our asset base in production, all with major partners on assets that can have multi-decade mine lives from a diversified perspective of highly prospective ore bodies. And so that makes me really excited about where the portfolio is going and where the company is going.
Yeah, and valuation-wise, as we look at Sandstorm, you have, one of the more diversified, one of the highest quality in terms of cost structure, high-quality operators, as we see when we go through the portfolio here. So it's impressive, and at the same time, your mention is that institutional guys are not willing to buy because they think you have $100 million too much in debt. So for those that are not constrained by, one could say, insane things, it's a pretty good opportunity to buy Sandstorm, I guess.
Yeah, certainly we think the valuation is as compelling as it's ever been, particularly given the underlying quality of the portfolio, and to the extent that the balance sheet is standing in the way of certain buyers, I think that's a pretty easy problem to solve, and it's something that will make a primary focus over the next, call it 12 to 15 months, and then we don't see it being a topic of conversation again, and hopefully that gives those that aren't constrained by those same parameters the opportunity to step in at a pretty compelling level.